So I've been a residential mortgage lender now for as great as my beard is, about 21 years now. So, but you know what? I still really love it. And you know, I started out with a company called Countrywide back in the day. Probably you all know that company, right? I worked for a super producer. This gentleman had billion-dollar plaques on his wall, and he told me, "Son, you get out there every weekend with your little bag and a flyer and a candy bar and a bottle of water, and I want you to hit every open house that you possibly can." So I did that. For about 5 years I did that every weekend. And I had a payday candy bar. And I became the payday man. So I walked into these open houses, they go, "Hey, payday!" And all of a sudden I started getting loans, and that's how I run the business. I would bring these packages back to my super producer, and I would say, "How do we do this?" And he would say, "Sit your butt down, we're going to show you how to do it." So I learned from the very beginning how to underwrite, how to process a loan. And I think that's really important in my industry, because you need to be able to know with confidence that the person that you're talking to can understand your actual loan. Because there's about a million different ways to put a loan together. And in today's world, it's about 1,000,002 ways to put a loan together, right? So it's important for me to know what a tax return looks like, what a K-1 looks like, what a 1120 is, what a Schedule E is. All this information that's on a tax return, so we know confidently that that client's going to qualify. And I feel confident that I can send out a pre-approval letter to get this person into their new loan or refinance their property. So we'll go ahead and start here. So the first thing I want to talk about is VA loans. It's something near and dear to my heart. If you served for your country, then you earn this. A VA loan is 100% financing. And did you know now there are no VA limits in California? So they used to put a limit on the amount that you could actually finance. That doesn't exist anymore. Because let's face it, we don't have $600,000 homes mostly in Orange County, right? We're looking at $1 million too right now. For your single family residence, 2,200 square foot home. So now a investor can go into that property. They can purchase $1 million, $1.5 million, and be able to finance that entire amount. What we use is certification of eligibility for these clients. We can typically get it back in about 5 minutes, and it's going to tell us if they are verified and certified to do a VA loan. For us, at Arbor, why it's home of the VA loans, because I'm 100% VA certified. So what that means is I've taken all these fun courses throughout my career that I don't have to get a second signature from VA anymore. We do the loan, we're done. There's no additional, because for a long time VA had this stigma that was a very difficult one to do, and there was a second section that you had to go through that had to go back to the VA. So it's like, hey, we got this beautiful loan, we got a bow on it, and everything looks great. But now we got to send it to Uncle Sam, we got to send it to the man at VA, and they would go through an entire new underwrite, right? So now you're looking at from a 30-day to a 60-day. And in this market, guys, you can't have that, right? We got to be able to close as quickly as possible. So 100% VA certification is just that. We certify the loan. We fund the loan. It's in our name. The loan is done. Our typical close time right now on a VA loan is about 20 days, right? So that's pretty darn quick. It's pretty darn quick. So this is a great way for someone who's just coming back to serve their country, circling back into the world, and be able to get into a home today. So they can do zero down payment, debt consolidation in the one loan payment. If we're looking at doing a refinance for them, we can go up to 102% loan to value. Not that I always recommend that, but they can do that. If they get themselves in a position where they need to pay off that debt, they got to pay off the credit cards, they got hit hard because of the pandemic, and now they have all this credit card debt, then we can do a cash out debt consolidation loan up to 102% VA. All right, we're going to talk a little bit about foreign national loans, just because this is something that's very new to us. Foreign national loans went away for a long time, now they're back. And we're getting a lot of calls about it, so I thought it might be something that we talk about. So foreign national loans right now, we can do up to 25% down payment. We do loans up to, this is 1.5, we're actually up to $2.5 million. And we can also do this as second home or investment properties. We have a lot of folks that come overseas, so they've been here for a long time. They have working visas. They're working on being part and staying in their country full time. So they can come over here and purchase investment properties and buy second homes, but still get the money back to us, right? And then we'll talk a little about a rate solution. So like Mike said, rates are great right now. They really are. But are they where they were last year? No, they're not. So rates are up almost a full percent from where we were last year. Now historically, we are still extremely low, right? Historically, we're looking at 4.5% to 5% over a 30-year term, a 30-year fixed loan, but we're not 2.5% today. So even though rates are very good, they are ticking up, and they will continue to tick up. I think as Jeff said, 2023 is what they're looking at. Well, Powell came out and said we're going to start tapering. If we're tapering, what he's talking about is mortgage-backed securities. When we start to take ourselves out of the mortgage-backed security market, that will start affecting interest rates, right? Because they have the control over that MBS, or mortgage-backed security. So rates are going up. What can we do to kind of eliminate or alleviate that pain? Because right now, you don't know how many phone calls I get from these young folks going, hey, but why don't I get 2.25%? Well, you can get 2.25%, but it's going to cost you 3 points. And if it costs you 3%, what are you really investing into yourself when you get that money back? There's a lot of folks out there that don't understand that. So we can do a call 2-1 buy down on interest rates. They start at 2% below no rate in 1 year, 1% no rate in 2 years. So what that means is these are somewhat adjustable. And this is not for everybody. This is more for your investor. This is not for your first-time home buyer. I do not recommend this. We look at a big sturdy year for a first-time home buyer. But this way, if someone is looking at purchasing an investment property and they have a plan for a 7-year or 10-year term for these type of properties, and they can look at these buy-down options, reduce those interest rates, get that positive cash flow, and then within that 5 to 7 year period, know that they may have a small bump up, but basing it on what type of margin or what type of term we're looking at. We're looking at a LIBOR arm or a coffee arm. This is the index, right, that controls that second piece, okay? So this is definitely more for the investor. We can also do interest-only loans. We have 40-year interest-only loans right now for our investors. In fact, I have a gentleman right now who's doing 3 properties. He's pulling $1.5 million out of each one of those properties, and he's doing a 40-year interest-only. But these properties are investment, and he wants positive cash flow. He's not concerned about the principal. He's not concerned about the tax position because he's got 60% equity available in that property even after he pulls out that 1.5, right? So interest only is a great way for investments to get positive cash flow on the properties. And then we also do long-term lots right now. We work with a lot of builders. And if you're building properties right now, right, and you come to me and say, hey, John, I want to get into this home, but it's going to take 6 months, and that's what the builder is telling me to get this done, well, then we have a program for our builder folks. It's a long-term lock. I can lock today for a 6-month period and lock in that market and lock in that rate for them, right? So they're not every morning getting up and going, oh, what's happening with the market today? You know? Okay, and I would end with this. So, cash out, we're right here. Thank you. So we talked a little about our VA, conventional loans. So right now, conventional loans are as low as 3% down. It's up to a loan amount of $542,250. Interesting amount, right? Where did they come up with this? Well, that was the original conforming amount, and you can still do 3% on that. Anything above that is 5% down. FHA allows for 3.5% down. Right now, we actually go to 3.5 million with 10% down, right? So now you can buy $1 million home, put 10% down on that property, and have no mortgage insurance. The first thing people know is, well, what's the MI going to cost me? We don't have an MI. It's called underpaid MI. Interest rate's going to be slightly higher, but you're eliminating that MI for the entire 30-year period, right? I recommend this on massive jumbo loans. I don't recommend it if someone's put 5% down on a conventional conforming loan in their first time home buyer. I'm going to close with confidence. As Mike mentioned, right now, extremely competitive, right? There's not a lot of inventory out there. We see properties going in less than 30 days on average across the board right now. How would you compete with somebody? When I have a first-time home buyer, these people work their butts off. They want to get into a home, they have 5%. How do I compete with someone that's coming in with all cash? We now have it. We have close with confidence and cash. So what we do is we fully underwrite folks now within a week. Within 7 days from the time that they come into my door, they are fully underwritten without a property. So just like if you said, John, we are in contract right now and we have to close on this property, now we're doing it without a property. We are lifting all loan contingencies. That's huge. Because typically that doesn't happen until 17 days, right, throughout the process. We're doing that within a 7-day period, as long as we have a documentation that we need from the client. Our approvals are now going out closing in 14 days, so now we're competing with cash, because cash is the 14-day close, folks. If somebody comes in and says, I'm going to pay 100% cash for this house, the rest of it will not allow to close within at least a 14-day period, right? So now we're competing with our cash offers. Our pre-approval letters or approval letters now are coming out saying no loan contingencies. This is huge for folks that are trying to buy a home right now, because they're competing against these people that are coming in 50, 60% down or all cash. So we need these type of programs so we can get people back in the country, especially on these type of matters. All right, folks, that's what I have today. Thank you so much. If you have any questions, I'll be available after.